Good evening, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, well, despite the fact that you might see the SPY and QQQ roughly flat on the day, today was definitely a volatile day overall. It also all started off early this morning, guys, with a pretty decent sized drop on the indexes. And the reason for that drop was because we had a producer inflation report that came in very early this morning that showed that inflation was a bit hotter than anticipated on the producer side of things. Matter of fact, a lot hotter than expected. Some of these numbers are arguably the hottest they have been since 2022. So the question remains, are producers going to absorb all the costs of the excess inflation that they're seeing in terms of the supply chain costs? Or are they going to transmit some of those costs over to the consumer? We just got the CPI report the other day, and it was showing by large and by far that, as a matter of fact, the consumer side of things wasn't really seeing too much inflation, and for now, the producers were absorbing it. But how long will they continue to absorb these tariffs, and will it start impacting their bottom lines? We will get into the details of this report in just a few minutes. Now, in other news today, this is the time of the season where we start getting the legendary 13F filings. Those filings are reports that are filed quarterly by a lot of these super investors in the markets, investors with very large portfolios that they manage for a ton of clients. And the biggest of them all, of course, is Mr. Warren Buffett himself. So today we got a 13F filing from Warren Buffett, and we were able to see what he was up to during the most recent quarter. What did he buy? What did he sell? Well, the biggest headline was an addition to his portfolio of a brand new company. This time it was United Healthcare. United Healthcare responding very well after that headline, up about 8% right now in the after hours. What's funny though is the Berkshire Hathaway stock is somewhat largely unchanged. But yes, he did start a brand new position in United Health, and it's a position that suits him well. We all know that Buffett absolutely loves his insurance stocks, and what better company than a company that's currently still down 50% year to date, a legendary player in the insurance space. Although healthcare insurance has been an area that Warren Buffett has avoided in recent years, he now pretty much sees value in the company. He started a $1.5 billion position in UNH, as you can see, a brand new buy. So a bit later in today's video, we will also be taking a look at what exactly Warren Buffett was selling and what other things he was buying too. So speaking about today's video, we got a few things to recap together. Number one, of course, we will be going through the details of the producer inflation report. How bad was it, and should you be concerned? Number two, I'll be taking you guys through Warren Buffett's new 13F filings, taking a look at what companies he's bought, what companies he's sold, and overall the direction that I think Berkshire Hathaway stock will be taking in the near-term future. And thereafter, guys, we will get into our technical analysis portion of the video, starting off with all the indexes, doing a little bit of a rundown because you can see there was some pretty good rotation in the markets. Growth stocks took a very big hit today, but what was there to make up for that sell-off in growth? Well, financials and healthcare, two sectors that have been largely flat for the past couple of weeks, now starting to come alive. In yesterday's video, I was talking to you about this rotation, and now we can see another day where the markets are challenged a little bit in terms of the growth narrative. And who is there to pick up the slack? Financials and healthcare again. So we'll be going through the market rotation and our indexes and derive whether or not there are some decent sectors to play and where. Thereafter, we'll be doing the same thing across our growth list right here of big tech names and retail fan favorites, where we derive which one of these companies is possibly at a good location for a buy, or possibly which ones are also at good locations for some long-term portfolio positions too. And then at the very end of the video, guys, of course, we'll be going through the biggest gainers and losers of the day. The biggest losers of the day, there were many, and most of all of them were growth stocks. And to the upside, we'll be taking a look at a few companies that did really, really well today and derive out of all of these stocks on this list which ones could represent some decent opportunities, which ones maybe I am considering playing as well. And that's going to be it for today's video, guys. I know there was some earnings today, talking about John Deere, talking about Applied Materials and New Holdings. We will do those tomorrow after the close. I'm a bit tight on time tonight, so we'll try to keep the video as short as possible. But tomorrow, I'll be doing a deep dive of those earnings. There's not too many earnings remaining, but definitely do want to talk about these three companies because they're all fairly interesting in their own respect. So that being said, that's going to be it for today's video. Let's jump right into the action, shall we? So the SPY up 0.01%, the QQQ's up, or rather down 0.08%, but the rotation was really the thing that you want to focus on today. Take a look at the heat map. You will see that a lot of the big tech names did perform really well. Amazon, another 3%. Why? Well, because of these headlines right here. Amazon could seize market share and drive down fees with its latest grocery bet. This is a news piece that came out yesterday to where Amazon was really expanding its grocery delivery business quickly and spending a lot of money to do so. And today, analysts were very bullish about that and started raising their price targets on the company. So Amazon up another 3% almost on the day. One point today, they were almost up 4%. Apple coming back, Tesla coming back a little bit, but overall, big tech was holding up the market as best as it could. Financials having a fairly decent day. Credit cards, banks, and Berkshire not doing too poorly. Healthcare was overall mixed, but I assume with the UNH news tomorrow, maybe that's going to provide some lift to the healthcare insurance niche of overall the healthcare sector. And the bottom half of the market, guys, well, it's when it's a question of increases in inflation. Well, of course, a lot of the consumer-facing stocks are going to be down, but not only that, a lot of the interest rate sensitive stocks as well, because you know the drill. Whenever it's a question of rising inflation, yields also go higher because, of course, that kind of goes against the narrative that the Fed is going to cut interest rates. And, you know, overall, just not a very good day for interest rate sensitives and or consumer stocks, but very logical moves, guys, because of the inflation report that came in this morning. On the one-day relative, you can see that even better. Healthcare, financials, communication services, which was largely led by Google and Meta, up and to the right, very strong. And the bottom, or the rest of the market, essentially kind of falling off a little bit. Now, you might remember yesterday, the 1 week relative performance was all green. Sadly, now we've lost a few sectors, talking about utilities, real estate, and defensives down. Largely, those are the most interest rate sensitive sectors or consumer sensitive sectors in the market too. On the upside though, healthcare and financials finally starting to perform, guys. I mean, look at the 1 month, right? Financials are about at the midpoint right here because of the last few days. Healthcare was on the lows, starting to creep up ever so slightly. So I'm still a big fan of building those positions on healthcare if you do not have them already and if you do enjoy playing the sector. Now, before we get into more technical analysis, guys, we're going to take a look at the PPI inflation report and what exactly it had to say. So here's the details. Taking a look at the month over month, we were supposed to come in at 0.2%. It came in at 0.9. This is like over a 2 standard deviation move from the expectations, of course, possibly closer to 3 standard deviations, right? Year over year was supposed to come in at 2.5. It came in at 3.3. Even core, month over month, 0.9 versus 0.2 expected. And core, right? Year over year, 3.7 versus 2.9. Not very good numbers at all. Take a look at this. Wholesale prices rose 0.9% in July, much more than anticipated, of course. So let's have a look at the graph, see where we are. So we can see that PPI has been a bit of a bumpy path recently. Nobody talks about the increases anymore that we had late 2024 when it went from 2.1 all the way up to 3.6, but everybody's really concerned about it now, of course, right? But overall, the trend in inflation is still well off the highs of 2022. And as the Fed has been saying, it's going to be a bumpy path, especially when you consider the impact of tariffs too. So 3.3 is where we stand right now. We will see whether it's going to form a trend in the next few months or if this is just maybe one single report. Moving on further, services inflation provided much of the push higher, rising 1.1% in July for the largest gain also since March of 2022. So curious, the tariffs on products, but what contributed to most of this increase? Services. So that's why you got to take these reports with a bit of a grain of salt and do a bit of deep diving into them. In addition, 30% of the increase in services came from a 3.8% rise in machinery and equipment wholesaling. Also, portfolio management fees surged 5.4%, and airline passenger services prices climbed 1%. Here's what some people had to say. The fact that PPI was stronger than expected and CPI has been relatively soft suggests that businesses are eating much of the tariff costs instead of passing them on to the consumer. Well, analysts are saying this right now, but you don't need to trust what analysts are saying. Just look at all the companies that we've reviewed together on the channel throughout the entire earnings season. That is exactly what they were saying as well. You need to look no further than Amazon and even Walmart. They were saying exactly the same thing, that so far they are eating the cost of tariffs. They're not really seeing any disruption in consumer spending patterns, and it's not really impacting their margins either. So some of the best and biggest corporations in the world are saying they're absorbing the tariffs. They have the capacity to do so. So we will keep a close eye on that moving forward. Additionally, though, in this detail, the devil is in the details, as always, right? The last sentence of this report, and this is all about trusting the data, right? Look at the last sentence here. July's PPI report was the first since the Bureau eliminated some 350 categories from the exhaustive count of input costs. That's not very good. If you want a broad market picture of inflation, well, you kind of need more samples than not. Eliminating 350 categories really removes the accuracy of these types of reports. So take this report with a grain of salt. The focus should always be on the consumer side of things, guys, right? Because at the end of the day, that's going to determine consumers represent, 60, 70% of GDP right now in terms of their spending in the economy. So the focus really needs to be on that element alone. So far, what we've seen from corporate earnings is that profits were still good. They're able to absorb the tariffs when they are affected by tariffs, of course, and they're not going for massive layoffs either. So I'll remind you of the balance of risks. The employment, full employment for the Fed, and also inflation, right? Inflation as a result of tariffs is going to be temporary in its nature. If they don't act soon enough, they may face an erosion of the jobs market, and that is a problem that's a bit more difficult to fix. But we just had corporate earnings, and none of the major corporations were signaling large-scale layoffs. So I'll remind you of the jobs data from last week. Non-farm payrolls was a bit softer. That is net new additions to the jobs market, right? So the new additions to jobs are getting a bit slower, but how many jobs are currently available? 7.5 million, a lot of jobs still in the economy to be had. And what is the unemployment rate right now? Still at historical lows, 4.2%. Until you see a big uptick in the unemployment rate, the market is probably just going to discount these reports a little bit. And I will remind you, if you want to check on the consumer side of inflation things and you do not trust the CPI reports that are coming out because you don't trust the data, just look at this website right here, Trueflation. It provides 30 million SKUs, which are analyzed, so 30 million different products, which are analyzed on a daily basis. The Trueflation report right now for the current stage in the month of August is currently at about 2%. And that is literally the Fed's target. It oscillates between slightly above 2 to 1.6 in the past 1 month, but you can clearly see that this number is much lower than the CPI has reported so far. I would tend to trust this data more just because of the sample size of products that they actually use in the economy every day. And as you can see, inflation right now for the consumer is not a problem, but obviously what the media and what sometimes Wall Street will focus on are these headline numbers, and those are the ones that will move the market more so than not. So that is everything I had for you guys for the PPI report. Hopefully you enjoyed that. Now let's move on to our brief segment on what Warren Buffett did today. So Warren Buffett unveiling the new stake in United Health. Let us take a look at exactly what he did today. Well, actually in Q2, you can see that he reduced his stake in Apple a further 6.67%, but it still does remain the largest stake in his portfolio. No secret there, Warren Buffett has been unwinding this Apple position for a better portion of the last 4 or 5 quarters overall. He did further reduce his stake in Bank of America by 4.17, increase his stake in Chevron, reduce the stake in DaVita Healthcare Partners, another healthcare play, possibly in favor of buying UNH instead. As I said, that is a new position, only a small 0.61% of Warren Buffett's portfolio, $1.5 billion, fairly decent size though. Domino's Pizza, add 0.51% to this position, very small addition by Warren Buffett. That's a new position for him, only been in it for about 2 quarters right now. A big buy on Pool Corporation, adding 136% to his already existing position size. Fantastic company, to say the least. Brand new buys in Nucor, steel, then also brand new buys in Lennar, and look at all this. Brand new buys in the home builders, and we've been talking about the home builders on the channel, guys, right? Possibly approaching the end of cyclicality to the downside, and it might just be a very interesting play for the next 2 years as we see a resurgence, or rather a rekindling of the housing market overall. We know the housing market has been very bad recently. Locked. The housing market is basically locked right now. It is indeed a buyer's market. Rates are still high. Inventory levels are still high. So if you're looking for a house, now will be the time. But these home builders may just be seeing better comparable numbers in the 2 years moving forward. Maybe Warren Buffett agrees, which is why he is positioning in some of these, right? So you have Lennar Corporation, D.R. Horton, and you also have NVR, right? NVR is a legacy play that Warren Buffett has had for a very long time, right? North Virginia Homes, very strong company. And here you have Lennar Class B as well. So increasing his stakes. He also increased his stake in Heiko. Heiko is a very, very strong company, reducing his stakes, though, in some of the legacy media corporations, such as Liberty Media and Charter Communications, 2 positions that I've never really understood why Warren Buffett had them. But those are the big facts for what we had in Warren Buffett today. Obviously, the biggest one that'll make the headlines around the board is UNH. And if you guys want my thoughts on UNH, they really have not changed, guys. It's going to be a longer term recovery story. They reduced the expectations for EPS for for 2025. They reduced the growth estimates for 2026 as well. I'm not saying it's not a good buy here. I'm just saying it has to be a very patient buy. If you're going into this one, you cannot expect it to move like Palantir or some very small cap company. It's a very large company. A lot of these companies, such as UNH, such as CNC, right, such as Humana, such as Elevance, they've all been absolutely destroyed. Now, I know a lot of you are wanting to position or maybe have positioned already, and my stance remains exactly the same. These are strong companies in a strong niche of the market. There's a lot of government subsidies that go along here. And right now, these companies are facing some problems that they can't really fix, right? People's insurance premiums are locked in for the year. They cannot raise insurance premiums. They're facing rising medical costs. Now you understand the problem. Rising medical costs, but fixed premiums for this year, it squeezes their margins. And also, you have a lot of demand for healthcare services right now. A lot of people that did not do any procedures during the COVID years have all been doing them since last year, and it's putting a lot of pressure on the company in terms of paying out insurance claims. These are two problems that they cannot fix immediately. They just have to go through the cycle. So these are decent buys, but for a longer term time horizon. Think in terms of years, the next 2, 3, 4 years, maybe not so much in terms of the next 3 months, or, well, rather, I mean, maybe Warren Buffett's buy is going to stimulate some short-term price action, but I'll remind you, right? Fundamentals of the company, before they regain the EPS that they had a few years ago, it's going to take quite some time, which is why all these buys need to be measured on a timeline in terms of years and not in terms of days, weeks, or months. So hopefully you guys understand they are very solid companies. The price of them are very cheap. We've covered them many times on the channel since this drop, and my stance has always been the same. You need to be in some sort of an accumulation mindset and really set your take profit timelines for very far out in the future. So keep that in mind. That's everything we had for the Warren Buffett segment. Hopefully you guys enjoyed that too. And as I said, I'll be bringing you guys more interesting 13F filings. We'll be going through some of the more interesting super investors here over the next few days as they start really pouring in. We'll go through Bill Ackman. We'll go through, Bill Gates, if they're able to do some stuff. We got some Bill Gates today. He reduced his shares of Microsoft and added 40% to Berkshire Hathaway. So I've been saying Berkshire Hathaway is a decent buy right now. Apparently, the Bill and Melinda Gates Foundation Trust does agree. They added 40% to their position while reducing Microsoft a little bit. Everything else unchanged. But I'll be bringing you guys more of these as they kind of pour in over the next few days. We'll take a look at some of the biggest and most legendary super investors and derive whether or not maybe we can get inspired from some of their buys or maybe even some of their sells. So that's everything for that segment of the market. Hopefully you guys enjoyed. Now let's dive into the technicals, shall we? So starting off with the SPY, you can see clearly that they ended the day flat, but obviously who is still in control here, guys? It is obviously your bulls, right? So the higher lows are still set at this level in price right here, which is roughly 620. So in the event we have a bit more volatility, you're just still expecting a daily higher low. Anything above 620, looking for a new daily higher low for possible further trend continuation. And we do still have an upward leaning bias in the markets. Why? Because the long-term bulls control all the time frames. They control the monthly, they control the weekly time frames as well, and your higher lows on the weekly are still set at 619, which means even if you unravel here in price and go into a daily downtrend, the likes of which we have not seen in the last 3 months, you are still just looking for a weekly higher low. And in the event things get a bit turbulent during the fall season, well, you're just at that point looking for a monthly higher low. I still do believe that all dips are for buying. Why? Well, because we just went through the earnings scorecard. 80% of all companies were beating EPS estimates. 80% of all companies were beating revenue estimates. Definitely doesn't sound too bearish for me, so I will still keep a bullish leaning bias, into the end of the year. I'll just be going shopping for my favorite companies on very decent discounts. Moving on to the QQQs right now. QQQs, same concept. The bulls not really losing much ground today at all. Higher lows are still set at about 551. Any move lower, looking for the higher low. Pay special attention to the reaction from the 12 EMA. They've been riding this one for a better part of the last 3 months. Any move lower, higher low, possibly for further trend continuation. If you unwind into a daily downtrend, you guys know the drill. Looking for a weekly higher low, and the same higher low area down there at 551 will be the mark to watch, and that is also your 12 monthly or weekly EMA, The monthly, which I was trying to talk about there, even if you unwind, guys, you got so much space for the bulls and a huge area of prior support around the prior all-time highs. 537 down to 511. I still do believe that all dips are for buying. So don't chase the markets, guys. Just be patient. Let the market come to you every single day, every single week. There are fantastic companies that are selling off for XYZ reason, and it's all about following the rotation, following the money, right? Even in today's market where we're close to the all-time highs, you have several high-quality, high-profile companies that I'm sure a lot of you guys love that have been selling off a lot. Companies like CrowdStrike, companies like Palo Alto Networks, right? Companies like Netflix that have been selling down a lot. Companies like Mercado Libre, right? There are very solid companies all across the board. Companies like Visa, companies like Berkshire Hathaway, in all markets, so long as you're patient and you know where to look for that rotation, you can find high-quality companies either for swing trades or for long-term position buys as well. You don't have to focus only on the names that get talked about the most often in the market. Moving on to financials right now. Financials, a very strong day right now. Daily uptrend is confirmed at this point too. And any move lower, looking for a higher low, quite simply. Anything above 51.22, looking for a higher low, possibly for a daily leg of expansion on the daily uptrend, looking very solid right there. The weekly coming out of consolidation of the prior all-time high range of support, 52, down about $50. So this $2 range has been one that the bulls have been using for support for a better part of the last 2 months. On the monthly time frame as well, very nice consolidation, guys. A lot of names in financials have been left behind. Look no further than Berkshire. Look no further than Visa as well. Hasn't really done anything, right? So if you're looking for names in financials, you want to play the names that have been lagging, and something that I rarely show, but one of the tricks that I always keep up my sleeve is look for the most high quality names that usually track the index. You look at this, it usually tracks the index. When the index goes up, these names go up. Sometimes you can find divergence. When you find divergence on these companies that lasts for a month or two, maybe it might be an interesting play if historically they usually track the index perfectly, and for the last 2 months they haven't. Well, what do you think is going to happen? Are they going to diverge forever, or are they going to catch back up to the index, especially when they're some of the highest weights in the index? I don't know. You guys tell me. Just some food for thought. Moving into XLV Healthcare right now. So same concept. Healthcare bringing a very nice bounce today, and even more in the after hours, up 0.81 after the UNH uptick. Looking very strong right there. Daily downtrend, nice engulfing move by the bulls. A lot of space now. Anything above 128 on a retracement. Looking for a higher low, for more momentum, for possibly they break. What are we looking to break here, guys? We're looking to break the infamous 137 area. We've been trapped here into an accumulation range for a better part of the last, 3-4 months? You can see it best on the monthly time frame. Beautiful support that we're into. This is support from 2021 through 2023, the 50 monthly EMA. In my opinion, guys, there's not many no-brainer buys that appear in the market. This is a no-brainer buy. It's not a buy that's going to play out the fastest and have the most amount of gains, but it's all about risk-adjusted returns in the market. There's not that much risk left on this trade, but there is some possible very decent rewards to be had, so keep that in mind. Moving on to semiconductors. Semiconductors up 0.21. They were down most of the day, guys, and they got it together in the last couple hours of trade right here into the close, looking very, very nice. So still, daily uptrend for semiconductors, guys, looking for a higher low. I was telling you guys to watch for the reaction zone, pull back here into 295, 12 EMA. The bulls in full control, looking for some higher lows for possible further trend continuation. If they can't get it done and they unwind the daily uptrend and they unwind this infamous 12 EMA, you guys know the drill. We're just looking for a new weekly higher low. Anything at this point above 278 would do it for maybe another bull leg higher. Looking at the SOXX, if you like to use this one better, the weekly bulls are in the exact same pattern right here. You're just looking for a weekly higher low, which we got at 231. Very nice expansion for the bulls, maybe looking to get the highs. And not only do we have sector by sector rotation, but sometimes within a sector, you will find some rotation. And that is the case right now on semiconductors. You might remember last week I was showing you only NVIDIA, Broadcom, and AMD were printing gains for semiconductors. Everything else was getting left behind. Now look at this list. Can you see the broadening out a bit of semiconductors overall? Now a lot more names are participating, right? A lot more names, like Micron is now participating in the rally. Qualcomm is participating. Texas Instruments is participating now. So now you have a broadening out within semiconductors, which gives the overall sector a bit more strength and a bit more ability to follow through continuation to the upside. So study the rotation game, guys. If you guys can understand how rotation works, both between sectors, but also within sectors, trust me, you guys are going to be able to follow the money and make a lot of money. Moving on to the Russell right now, the Russell down a little bit today. Very obvious as to why, right? Because of the interest rates that, well, the longer term yields that were up and a bit of the unwind of the growth trade as of recently. But the daily uptrend is still confirmed right now, looking for a higher low, anything above 218.48, looking for a new higher low. For possible further trend continuation beyond the resistance range, 231 to 225. We're currently back testing all these guys down there. You also got the 12 EMA, which is about 225. Not looking too bad, but still, we will see, can the bulls close above the infamous area of resistance by tomorrow, or will we unwind for a bit more consolidation? If you unwind, I'll remind you, we're looking for a higher low on the weekly. Anything above 212, looking for a higher low, and possibly a second attempt. If you get some drops down below there, selling some puts down here, or accumulating some shares for a longer duration trade on IWM is not that bad. Why do I say longer duration? This sector hasn't done anything, guys, in like 4 years. In my opinion, into 2026 with rate cuts and a better outlook on the economy with more certainty, the tariffs will be well behind us at that point. The tax cuts will be easing into the economy, into the consumer's pocket as well. I think growth stocks are set up nice. This year might still be a little bit of a toss-up for them, but 2026 and 2027 could be your catch-up years in the Russell. So it's a question of building positions and viewing them with a longer-term time horizon, in my opinion. Moving on to the VIX. Well, the VIX had a little bit of a pop this morning, early morning, but you guys can see that did not last very long. So the VIX still trading around historical lows, which means this area on the VIX is for buying. Buying what? Buying leap call options, but not on everything. On your favorite companies that have been left behind a little bit. If you guys want to know, I mean, I didn't tell you guys because I save a lot of this stuff for our Discord members, but this is how we were able to buy some of the lows on Visa. When the VIX is low, you look for high quality companies that have been selling off from their highs. I have other rules as well that you should be looking at too, but I digress. Anyways, you can be looking for high quality companies. It doesn't necessarily have to be the Palantirs of the world. And you can find very attractive leap call opportunities for very low volatility, which means that normally when you couple low volatility with a low price, you get a very good price on those call options, right? So keep that in mind. Take a look at some of the companies that have been lagging behind. As of right now, the VIX is still low. Yields just not doing a whole lot of much, right? I mean, they were up today, they were down yesterday. As I've been saying on yields, guys, it's going to be sideways and very choppy and volatile until the September meeting with the Federal Reserve, where they give us more indications as to what they want to do with yields for the rest of the year, right? If you break down below 4.2, perfect. We got a weekly downtrend. We can talk about the unwinding of the longer duration yields, 10 and even the 20-year yield. The 20-year, pay attention to 4.75, 4.7. Still no breakdown below. So this one will be very volatile, which means as well that the bond trade is still doing a whole lot of nothing. I've been talking about it for 3 months. A lot of people ask me about bonds, and I keep saying the same thing. You got to be patient. You got to wait for the Fed. But once the Fed starts cutting, don't fight the Fed. This trade will probably work, right? Moving on to gold right now. Gold, you would think on a day like today, with inflation reports, that gold would be the perfect hedge, right? Sadly not. Rejecting from the resistance range, 33.65 up to about 33.96 is the resistance range. If you cut these lows into tomorrow, sadly, the bulls tried to go for a daily uptrend, but unfortunately being unwound right here. Going to be a daily downtrend, but this is all very tricky price action. Why? Because it's in the confines of a big range. Look at the weekly here. We're very tight. So if you guys are getting chopped up by gold, I don't blame you. That's what usually happens in the confines of a range. So I'll be looking for a break of the range either way to play this one. I need a break and retest to the upside to confirm the bull's willingness to go for the all-time high push. I'll need a break to the downside to possibly throw on some shorts for a break to the downside and weekly consolidation. As of right now, price action is just a bit too tight and too choppy for me, so I will not be doing much of gold. On to Bitcoin right now. Bitcoin down 4.4%. You know, funny enough, after hitting a brand new all-time high this morning, from the top to the bottom, you're talking about a 5.72% push on Bitcoin. And what I was telling you guys about yesterday is watch for the big volatile days on Bitcoin. Sometimes you can find some very attractive short puts on names like BITX, if you want to play 2 times leverage, on names like IBIT, if you just want to play normal. This is the previous all-time high range, guys, right? That area right there is this whole area right here on Bitcoin. It's prior all-time highs. This is the area that I want to be playing the back tests for. So the bulls tried to go for it. They got shut down by the inflation report today, and the higher lows are still here on Bitcoin. Let me just use the actual chart with the levels. Higher lows are still set. 116. We're coming into the bottom end of support again. So I don't know if we're going to hold this level. If we break, well, you guys are going to understand, right? Engulfing move, they have a chance to set another downtrend based off of that level, and we would be heading into a bit more weekly consolidation. But this has been some form of a very wide bull flag. Exactly the same as back here. I still do believe on Bitcoin that most dips will be for buying. It's just that I want my buys to be as close as possible to either the weekly 12 EMA or just selling some puts down there could just do it as well. So Bitcoin is not looking too bad, but we had a bit of a pullback, was to be expected. It's a growth name, and it was beholden to the sell-off with other growth names today too. Ethereum, not quite making it up to the $5,000 mark, but we know that Ethereum is working with an absolute ton of space right now. So that being said, guys, daily uptrend is very nice right now on Ethereum. Higher lows are set right now at 41.59. So looking for a new higher low for possible further trend continuation. In the event that that's not possible and we unwind more of this Ethereum move and either fully engulf or just set the two-step daily downtrend, you guys need to understand one thing. We're just going for very healthy weekly consolidation. Who's in control of this chart? The weekly bulls, right? And today's price action is probably not going to undo that. Anything above 33.63, looking for a higher low for possible further trend continuation. So if we're looking to buy some dips, the logical level is back down here. 4,000 down to 3,700. A nice little back test. If you're not sure if it's going to get there, we can always sell some put options on names like ETHE, right? Just use the same levels that they're coming off of. ETHE or ETHA, another Ethereum play right there, down here 28 to about $30. If it comes down there, perfect. You get some short puts that are filled and maybe you can ride those shares. If not, you just get to collect some very juicy premium. It's a bit tough for me to just buy this dip, right? And just anticipate that we're going to continue further. It can work sometimes, but you know, I'd like to have more stable price action and large weekly levels to base my trades off of. The rest of altcoins, of course, falling off a cliff today onto some much needed consolidation after a very nice push the last 2 weeks. That's everything for our overall market rundown. Now let's jump into some of our big tech names, shall we? So first off, let's take a look at good old Apple. Apple down about 0.25% today, but the bulls still remain in full control. You might be thinking, yeah, but Warren Buffett just sold. Well, not quite. Warren Buffett sold a while ago. He sold Apple at $205. So sadly, Warren Buffett selling almost the bottom of Apple. I assume it was done back here into the consolidation range, but he's up so much money on Apple, I don't really think he minds. But that being said, guys, Apple not down too much after that Warren Buffett news today of him selling another 6-7%. That being said, who's in control right now? Well, it's obviously the bulls. If we come back down and backtest this region, we are now able to use a lot of it as support, 232 down to about 216, and the area of interest would still be all the way down here, under 220, about 216, 217. All of the EMAs are sitting down there as well, and the weekly bulls are working with an absolute ton of space. Beautiful engulfing move. We would just be looking for a new higher low. I will be selling some put options down there, and this would be a nice area for some reloads for some longs. I already have my longs. My longs were purchased around the lows, so I'm good. But if ever we fall down a little bit more, that is where I would be looking to reload a bit of Apple call debit spreads or leap call options or things of that nature. But as of right now, sitting pretty, just enjoying the gains a little bit as the bulls are a little bit extended here on the daily timeframes. Moving on to AMD right now. So AMD, sadly, again, struggling a little bit at the highs right now. Let me just erase my drawing. So AMD unable to break through resistance 184 down to about 171. This one was oscillating all throughout the day. Sadly, today ending down about 2%. The daily bulls are in control though. Nice daily uptrend. Pay attention to the 12 EMA and the higher lows, which are set at about 168.74. In the event you unwind, engulfing move, or end up in a daily downtrend out of resistance, you guys know the drill. You guys know exactly what we're looking for, right? Looking for some weekly consolidation. And if we do get weekly consolidation, I'll be doing the same thing that I've been doing every time we do drop, which is selling put options down below here, preferably closer to the 150 area. This would also be a very nice reload zone for some AMD longs or some AMD leap call options if I was looking to buy such a thing, right? At 170, where we're not too far away from right now, right? The price is pretty good, all things considered. 1.46 on a forward peg ratio and a 44 forward price to earnings. 8.78 price to sales. Not too bad, guys, considering the fact that AMD is going to be growing wildly in many different ways. Not only are they going to be growing the revenues substantially on the top line here, look at these revenues, guys. We're talking about like a 2x revenue jump in the next 3 years. EPS, very strong as well. From 2024 to 2027, we're looking at over 2x on EPS. So improving top and bottom lines. AMD should be a very interesting hold into the next 2 years. On to Amazon. Good old Amazon. Why were they up another 3% today after being up a healthy 1.5% yesterday? Well, we didn't talk about it too much yesterday, but we will today. right? Seizing market share and driving down fees with the grocery bet. What does that entail? We believe the expansion of same-day delivery for fresh, perishable groceries will support Amazon's continued share gains across US e-commerce despite increased competition. The team at JP Morgan reiterated the stock as its best idea. They copied me, man. I've been saying Amazon's my best idea for the last 6 months and maintained a $265 price target. This expansion targets a substantial growth opportunity, as groceries account for 43% of all US retail sales, with only 15% currently sold online. Amazon's grocery business surpassed $100 billion in gross merchandise value last year, making up about 20% of its US GMV. Nobody talks about this. It just goes to show you how wide of a company Amazon actually is. Not only do they have the e-commerce business, which encompasses groceries, of course, but it encompasses many things: electronics, toys, clothing, anything you could possibly think of, right? They have AWS, they have advertising, they have Prime Video, they have Project Kuiper, which is like a mini Starlink. They have the robotics business, they have the pharmaceutical business that they're expanding into. So many, they have Zoox, right, for robo-taxis in Las Vegas that they're expanding now. They have so many different lines of businesses, guys. You're buying a very wide company if you're buying Amazon. And when they attack something, they have so much scale, so much economies of scale, so much pricing power that they can really disrupt any competitors in the space. Amazon's move initially sent shockwaves throughout the sector. You remember yesterday? All these names were down: Walmart, Costco, Kroger, Albertsons, and BJ's Wholesale Club. Delivery players like DoorDash and Instacart's parent Maple Bear fell 4% and 11% yesterday on the news. And today, they didn't even recover, down more. So it just goes to show you, when Amazon does something, they disrupt everything. So I would rather have Amazon than shares of these other individual companies. But that's just me. I know it sucks, but it is what it is, right? That's kind of capitalism. I know I'm kind of just like hiding behind that sentence right there. But what are you going to do, right? If we're looking to invest, you kind of got to invest with the best and the ones with the most power. It is what it is, right? It's not the most ethical thing to do, but it is what it is. JP Morgan said Amazon's grocery blitz could significantly widen its lead in US e-commerce. The firm notes that Amazon has been cutting costs by building out same-day facilities, placing inventory closer to customers, and deploying more robotics and automation. They're a huge robotics company, man. These efficiencies, combined with Amazon's pricing and scale advantages, could allow the company to grow its grocery business without the profit drag typically associated with fresh food delivery. More grocery customers also means more opportunities for Amazon to sell ads, a business that grew 22% year over year in Q2, as more brands fight for visibility on Amazon's platforms. JP Morgan expects advertising revenue to rise further. Analysts say the latest expansion represents Amazon's most aggressive play for groceries yet. Earlier this year, Amazon announced a $4 billion investment through 2026 to increase its rural delivery footprint to reach 4,000 rural locations. That is the headline that's powering Amazon higher, and why, I know not just this headline, but this is why Amazon is my favorite company, one of my favorite companies for the next 2-3 years. Daily uptrend, clear as day right now, breaching through resistance, 227 down to 218. Higher lows are set 218.7. On any move further down below, we're going to be looking for a new higher low and all this support to support the price. Looking very good for a possibility of expansion, unless they just do it right away, right? Amazon is quickly making its way back to all-time highs. It lost them after earnings. I thought this earnings sell-off was absolutely ridiculous, which is why I added to my positions. Now, moving on further, who controls this chart, guys? You tell me. Weekly bulls, thank you very much. Higher lows are now set on the weekly at 211.75, and the bulls looking very strong at 222.30. Is it still a buy? It is still a buy, guys. Amazon was a buy yesterday. It's a buy today. It'll be a buy tomorrow for the next 2, 3, 4 years as they expand their profit margins in all of their lines of business. Watch out for this company. Moving on to Google right now. Google up about 0.39%, not looking too bad at all. That being said, struggling with the all-time high area of resistance, which is 208 down to roughly 202. And in the event we fall back down, we got a lot of space here, guys. Anything above a 188.5, looking for a new daily higher low for possible further trend continuation. If we fall down below there, I will gladly be selling some put options in the lower 190 region, because who controls this weekly time frame? Should be very obvious, right? It is the bulls. You're looking for a new higher low. What better area to set it in than an area that they've used prior as support, and an area that came up as resistance as well. And the 12 EMA on the weekly sitting right down there. Is Google a buy right here at $200? Well, it depends on your time horizon, right? At 190, it is not too bad. Forward price to earnings and forward peg ratio are still quite low, but I understand some of you might be concerned about the dominance of the search landscape. Well, so far, no data indicates that they are losing anything in the search market, at least not in terms of profits. And additionally, as well, you might be nervous about the Department of Justice lawsuit against them, which could result in them having to break up the company. Whatever the ruling is, and we're going to get that ruling in the next few weeks, whatever it is, it'll probably be tied up in courts under an appeal for at least the next 6 to 12 months. So still a lot of time to parse through those news headlines as they come out. On to Meta right now. Meta up about 0.26%. Not the worst day for Meta, but still consolidating. Beautiful trend breakout by the bulls 2 days ago, but still consolidating right now. Higher lows are set at 759, looking for a new higher low for possible further trend. In the event you get the follow through, $800 psychological. If you unwind into a daily downtrend, the clearest time frame, of course, is always your weekly. So keep in mind always who controls the weekly. That way, when the selling pressure, if it does come in Meta, you're not panicking. You have a plan, right? And we're looking for a higher low. Anything above 694, looking for a new higher low for further trend continuation. I will be buying Meta. If it does come down there again, sub 750, 740. No swing trades for me on Meta just now. However, moving on to Microsoft right now. Microsoft up about 0.36%. Oof. Holding on to the 12 EMA. Barely. Right, so we're watching out for the perpetuation of this daily downtrend. Moving on, 12 EMA as well. If they lose this, and if they lose this 12 EMA and have a daily downtrend, you guys know what's going to happen. You're going into weekly consolidation. The next relevant area will be the 12 EMA on the weekly, sitting about at 495. As of right now, the bulls are barely retaining control. We will see what happens, right? That being said, Microsoft on the weekly is still in weekly overbought conditions. So you would not be surprised if it does move a bit lower, although the bulls are holding right now. In terms of valuation, Microsoft is still at the top end of its valuation range. Microsoft for me right now is a hold. It's not a buy. It's not a sell. It is just a hold. And also for some swing trades, we're just too elevated for me to take logical swing trades right now. On to Netflix. Netflix actually not doing too bad today. 2.17% to the upside. Beautiful push by the bulls right here, right? So daily downtrend and loss of the 12 EMA. We had the daily downtrend, and you guys know what that translates into. It translates into weekly consolidation. How do you know weekly consolidation is done? Eventually, you will see an engulfing move by the bulls and a recapture of the daily uptrend. So far, we have the engulfing move, but we do not have the daily uptrend. As a result, you don't know if this is just going to be a weekly lower high and flush, or whether or not they're going to continue. It all results in the recapture of the daily uptrend. If they don't do it, well, then we can't say that that's the weekly lows. If they do it, and then depending on how far they get with that daily uptrend, it'll look something like this, and then they'll unwind. Then you look, when they've unwound there, how high did they get? A very high bounce gives you good odds for possible follow through on the higher time frames. A very shallow bounce does not. So as a result, Netflix right now, for me, in this situation, it's a bit of a no trade, right? If you do want to trade it and kind of count on these guys down there, stop loss has to go down below there because you're extrapolating, you're speculating that this is going to be the start of a new daily uptrend and the start of a weekly push. As a result, if it doesn't happen, you need to keep a stop loss below there because if not, you're going into more weekly downtrend and you're going into more monthly consolidation, which could result in us coming right back down to about $1,050, $1,000 per share in line with the monthly 12 EMA. Netflix for me right now, in terms of long-term portfolio, is just a hold. It's not a buy. It's not a sell. Depending on your time frame, though, Netflix should, per management's guidance, be a $1 trillion market cap company by 2030. Just from their rate of expansion right now. As a result, if you have a very long-term time horizon, then the trade makes sense. If you're looking for very quick appreciation, then it might not make sense at these valuations. So keep those notions in mind. Moving on to NVIDIA right now. NVIDIA up 0.25%, but NVIDIA not doing much for a better part of the last 5 days. Still, though, not losing the 12 EMA and not losing the uptrend. Anything above 170 looking for a higher low for possible further trend continuation. But if you lose this area and lose the daily uptrend, you guys know what's happening. We're going into extended weekly consolidation, the result of which could maybe see us come down and back into the 162, retest of the 12 EMA on the weekly timeframes. That being said, NVIDIA is not a swing trade long for me right now, a bit too extended, but for forward valuation, it's not looking terrible. And if we had to add something, well, I'd rather add something back here on a back test of the lower 160s. Not too sure if we're going to get it, but if I want to ensure that I have a good compound annual growth rate of return, I need to get a little bit of a discount on NVIDIA right now because the valuation is not too stretched, but it's also not cheap. Moving on to Tesla right now. Tesla down about 1.12%. We know they've been struggling with the resistance area above 360 down to 340. And pretty much what we're looking at right now, guys, is a nice daily uptrend, breakout of a tightening range. You can call it a bull flag. It's a very wide bull flag, but eventually tightening range, breakout to the upside, weekly uptrend, and daily uptrend too, which means that the bulls are going to maybe look to backtest the area that they just left out from. The backtesting of this line right there too. Call it 326, 325. If you get the backtest, there could be an attempt here for the longer term time frame breakout, looking for the weekly higher low, backtest, and then maybe run. A few companies have done well with this pattern. One of them was Apple. You might remember this right here when Apple had this pattern. Eventually they broke out of it. It took them a while, right? They came back after earnings. They didn't backtest it quite right there. I entered here for my longs, more longs down here, right? When they backtest the area, I mean, this is kind of too long, but you guys get what I mean, right? When you break out of a tightening range, you have a bullish leaning bias. So you can adopt a bullish leaning bias on Tesla right now. That being said, overhead resistance stays at the same location. And if they unwind and are unable to do it, we will reevaluate the trade for an entry down here. 300 down to 260 is the support range. On to Palantir right now, 1.82% to the downside, still unwinding on Palantir, but that's okay. They got a lot of gains. Anything above 151 looking for a new daily higher low for possible further trend continuation. If you pull back too much, keep an eye on the fibs, guys, right? If you engulf too much, like a 50, 60% move, it opens up the doors for the bears to have a turn, meaning it might just translate into a daily downtrend. If that's the case, well, you have to understand we're going into weekly consolidation. The next likely area would be a 12 EMA, which at that point might just be about 160. Bulls with a lot of space, anything above 129, looking for a weekly higher low on Palantir. So not all that bad on Palantir right now, but still very extended on the RSI timeframes on the daily, extended on the weekly timeframe, extended in terms of valuation. I know nobody cares, but if you're just looking to play the level-to-level trades, if we get a very quick and rapid unwind on Palantir, some volatility, well, maybe we can afford to take some options plays, talking about selling some puts far under the market. But for me, right now, no swing trade on PLTR. On to SOFI. SOFI, not a bad day, down about 2.18%, still struggling with the resistance range above, which is 24.5 down to 22.5 roughly. So that being said, guys, who's in control? Well, it is your daily bulls right now, looking good for some expansion. They've created a lot of space right now, so we're looking for a higher low, anything above 20.57. These areas right here, right? 20.57 looking for a new higher low, possibly to gain some more momentum to try and crack through the resistance range. That's unless they do it immediately right away. There's two styles of trades right here. Either we want to play a back test to sell some puts under the market. At that point, it'll just be healthy weekly consolidation, or you're looking for the infamous breakout retest trade. The breakout, the retest of the range, and then maybe the swing trade long. Not looking too bad on SOFI. If you want to know how I'm playing this one, I'll be looking to sell some puts down here. If we fall down really rapidly in that area and I get a sign, I'll be approaching with a DCA mentality. Some there, some there. I'm not saying it's going to go down there. I'm just saying if I'm playing short puts, that's indeed how I want to play it, because that would be a weekly unwind right here and just very healthy monthly consolidation on SOFI. For now, SOFI for me, I'm just holding all the shares that I was able to accumulate at the lower end of the range down there. Valuation in around 21 is not that bad, so pay attention if you want to add some SOFI shares. Not that bad in the lower 2021 level. On to Uber right now. Uber, not too bad of a day, 0.63%, but still very choppy, guys. Confined to resistance right now, 93.4 down to about 90. That's the resistance range. Very unclear price action on Uber right now. What you really want to see here, I mean, you can argue that's a bit of an inverse head and shoulders. Sure, I'll give it to you. What you really want to see, though, is the breakout. Give me the breakout retest I can play. Because if you get the breakout and retest, it shows that the bulls want to capture the level. I can put a stop loss below there, and I can easily go for expansion into 100 psychological. Very easy, very logical trade. Right now, it's just very choppy. If we move to the downside, I'll gladly be selling some put options down here, lower 80s, because I enjoy the valuation at lower 80s. Around 90 bucks right now, the valuation is not bad, but if I can get another 10% discount from this valuation, I really wouldn't mind picking up either more shares for the long term or playing it on the wheel when we have a very large area of previous resistance, which will be acting as current support and would just be looking for a bit of monthly consolidation on Uber, the clearest time frame for Uber right now, in my opinion. Moving on to TSM. TSM pulling off their highs, but still not too bad of a day on TSM, right? 246 is still the highs that we cannot break through. Pay attention, though. This is line in the sand. 229. line in the sand level. Break this, guys, and you are going to get the daily downtrend. You're losing the 12 EMA incrementally right now. The bulls are still strong, right? We haven't lost anything. It's just a very wide, when I say wide, I mean it's like a 10, 15 point wide range, right? So it's a very wide range right now, but pay attention to this guy right here. This is a line in the sand. Lose this, and you're definitely daily downtrend. You're definitely further weekly consolidation. Right now, just very wide sideways consolidation. So the bulls are clearly accumulating at the highs. Every time we get some dips, they get pretty rapidly scooped up. So that being said, if we have more slide, what are we looking for? Just a weekly higher low, guys. It's all just weekly higher lows. And where could we possibly find some entries? 226 down to about 220, logical area, prior all-time highs, which would be a little bit of support. And the 12 EMA on the weekly, not too bad. You'd just be looking for very casual higher lows, and I'd be a big fan of buying some TSM swing trades down there, but also adding a bit to my long-term portfolio as the valuation is quite manageable at these levels. And with that being said, that's everything I had for you guys today for our entire list. Now let's move into the biggest gainers and losers of the day, shall we? Okay, so we're going to start off with the biggest losers. The CoreWeave saga continues. The lockup expiry period is tonight. So a lot of people are very nervous that tomorrow a lot of private investors are going to be selling their shares, a lot of employees selling their shares. And as a result, CoreWeave is down 15% and another 4% in the after hours. This stock is now down from the earnings all the way to the post market right now, 37% in just a few short days. Now, of course, guys, it's very difficult to ascertain where the actual selling is going to stop. The best thing that you can do if you're maybe looking to position is sell some puts well under the market. There's some great volatility on CoreWeave right now. Just don't go too close. Give yourself some good distance. For next week, there's some fantastic strike prices available in the 70s. It's impossible to say whether it's going to stop here. It's just going to be a bunch of retail selling, right? A bunch of retail panic selling, then retail FOMO buying. This stock is very volatile. You guys know the drill, though. For the long-term, CoreWeave has some decent upside. The risk-adjusted returns, because I'm not saying there's no risk, it's going to be very volatile, right? So be prepared if you're invested in this stock to sit through a lot of that volatility over the next coming weeks, over the next coming months. But the long-term vision of the company is quite clear, especially when you consider their 2027 and 2028 sales pipeline, which is absolutely massive. We covered their earnings just the other day. I will be buying more shares. I started buying CoreWeave shares. Very small though, guys. I bought my first batch yesterday around the low 120s, and I'll be DCAing as we fall down here. If we fall down to 90, I'll buy a bit more. Fall down to 80, I'll buy a bit more. I'll be trying to build a position in this location, which I will be holding for the next 2-3 years as part of my growth portfolio. I keep a lot of stocks in a tax advantage account. And I usually, when I know that a stock's going to be probably having its best growth years ahead of it, the next 2-3 years, it's not a stock that I want to hold for the next 5-10 years. But when I think there's a nice risk to reward play here and I want to go with shares and build a position and then hold it for the next 2-3 years, that's how I play it. I'm going to be doing the exact same thing on Circle. So Circle as well, right? Clear loss of the last area of support that we just had, which is 150. Next area that we have is 120 down to about 105. Same thing. I bought some Circle shares just yesterday at the lows, 151, but very small. I'm building my position as we drop. So as a result, my next buy areas will probably be down here a little bit, 130, and then more down here. And I'll be building a position on Circle. We covered their earnings just the other day. Their growth prospects for the future are very, very solid. But obviously, if you're looking to play this one for the exact pinpoint location of a reversal for calls, it's not going to be a very good time. If anything, you should be waiting for a daily uptrend. Wait for the bulls to confirm it to you. Same thing for CoreWeave, right? Wait for an uptrend. The entry goes here, the stop loss goes below there, and then you can target for expansion of the levels, right? If you're just trying to buy call options on the way down, you're trying to catch a falling knife, you need to wait for the time frames to be in your favor before doing that. If not, it's just an accumulation play for shares for a long-term play, 2, 3, 4 years, or you're looking to sell puts well below the market as low as you can possibly get while still getting 0.5%. Those are the only two ways that I see that is possible to play these very volatile names after they've had their recent IPOs. Moving on further, on running. They had their earnings just the other day. I mean, this one, it's been tough for these guys. It's been tough for them. It's been tough for Decker's Outdoor Brands. It's been tough for Nike because of the tariffs, right? If I had 1 or 2 out of the 3 that I would pick, it'd probably be Nike or Decker's Outdoor Brands. On is a very strong company, guys. Very strong company, but we just lost a very crucial level. As a result, maybe selling puts down here under 40 bucks is not too bad. It's not one of my favorite plays to be making. We are unwinding at a pretty rapid pace right here. And same thing, right? why are we doing short-term buys? Like, we do not have the uptrends right now. There's no daily uptrend, there's no weekly uptrend, and as a result, there is no swing trade longs for me. Moving on to BITX, we covered BITX early on the video. Short puts down here, guys, lower 50s, which is the prior all-time high range of Bitcoin, 108 down about $100, right? So I'll be looking to play the heck out of these BITX options if we drop. Same thing for Figma, talking about CoreWeave and talking about Circle. You guys eventually will understand what I mean when I say you need to wait for the daily uptrends. If not, any buys are just not going to be rewarded, guys. You need to let the bulls show you when the sellers are exhausted. When the sellers are exhausted, you will see a recapture and an uptrend and more participation, right? As of right now, it is still just a falling knife. We are breaching below here, and I've kept saying that this company is wildly overvalued. They're currently at $37 billion. They make $1 billion in revenue. That's 37 times forward price to sales. They're growing well, but there's only so much that you should be willing to pay for a company. I know they're a very hot AI play. They were a hot IPO, but everybody here got trapped. Everybody here got trapped. Everybody here got trapped. So I'm going to be interested in Figma. I mean, don't take offense by this price target. If you're in this one, right? I'm only interested in Figma for me, where the valuation makes sense for me to buy 60 to 55. But there's ways around that, right? If you don't know it's going to go down there, but you'd be willing to buy it there, well, there's one specific option type that you can do, which is a buy limit under the market that pays you regardless if it gets filled or not. And take a look down here. You can go all the way down for next week to the 64 strike and get 0.5%. Very good volatility. It's an 8 delta. It doesn't mean it's going to go down there. It just means that if it does, I'm happy. I buy shares where I actually wanted to buy them. And if not, I'll just get to collect some premium on the way down. John Deere at earnings today. We will cover their earnings tomorrow, I promise, for you guys, right? Coming around the 200-day EMA. So just look at historical averages, right? It's in the context of an uptrend, in the context of support, but I'll give you guys a bit more information with the valuation tomorrow. TTD for me is a no touch. I mean, you can try and farm some short puts down here, lower 40s. The valuation right now at 50 is a bit more manageable than where it was after earnings. 1.48 forward peg, not a bad price to sales, not a bad free cash flow yield, but still somewhat relatively high, and the revenue growth rate is slowing, by the way, and their business is getting, well, they're having a lot of competition. Guess from who? From Amazon. So that's why trade desk for me right now, it's not my favorite position. For pure play advertising, it's definitely not my favorite position. For advertising, I'd rather go with the Meta. I'd rather go with AppLovin, which is much more niche. But I wouldn't rather go for Trade Desk. It's definitely not my first pick. And that's just my, speaking about AppLovin, just my impression. Speaking about AppLovin, pay special attention to the back test right here. 405 down to 378 could be an interesting opportunity for some swing trade longs. So you give a stop loss level there, 365. So you've pulled back, easy breakout retest. And it's a breakout retest on the weekly timeframes, right? Higher time frame breakout retest, or for selling some puts. I mean, it's up to you guys, right? I can't really tell you to spend 40 grand selling some puts. You can only do that if you have a very, very large account and it will be a small position for you. The volatility is good. You can get some good premiums under the market. Just try to target the bottom end of that support range. Don't get too greedy on these, right? If you take a look at other names that are on the lows today, I mean, we covered Bros yesterday. You guys know my ideas on that, right? Low 50s for me if I'm going to play it at all. Talking about Rocket Mortgage, they had a pullback from yesterday. I sold my calls at the top of the market, but the daily uptrend is still very clear right now. So if it pulls back, like a weekly pullback, I'll be looking to sell some more options, maybe like 16, 15. But for now, that's pretty much everything on Rocket. I'm not going to be chasing it up here. Unless you're trying to accumulate shares for like the next 2 years as part of like the whole mortgage plays, home builder plays, et cetera, right? MSTR, I mean, you guys don't really need me to talk about MSTR, do you? Just follow Bitcoin, right? So if you're looking for MSTR, it should be very clear. If you're looking for MSTR trades 2 times more than Bitcoin trades normally. So if you're looking for a 5, 6, 7% pullback on Bitcoin into the prior all-time highs, which is there, well, MSTR, you should be giving yourself a 10, 12, 13% wiggle room, right? So where would that be on MSTR? Well, casually back down into the next line of defense, which is down here, 340 down to 309. It doesn't really move on its own. It moves with Bitcoin. So as a result, use Bitcoin as your guide in terms of where the stock might be able to go. Moving on further down the list here, Shopify. Shopify for me is maybe a backtest trade. If I can find some short put options down here, 130, unwinding a bit of the earnings move, no problem. Currently a daily downtrend after earnings, so very tough for me to swing trade long from here. Not going to do it. I'll wait for the weekly pullback possibly. Nice support back there. So we'll see if it comes up on the channel soon. Their earnings were fantastic. Long-term shareholders, probably need not to be nervous at all. It's a great company, but just short-term swing trades, right? You got to be a little bit careful when the moves are extended like this. Some of the nuclear plays, SMR was talking about this every day of the week so far. Complete unwind, bearish engulfing. As a result, when you see that happen on the weekly, right, they had a beautiful weekly uptrend. They've lost the entire second leg of that uptrend. When you see that happening, the first thing should come to mind is monthly consolidation. Should be very clear what's happening right now, yeah? Monthly consolidation. They still have the uptrend, but it's big consolidation. If I'm looking to play this one, it needs to be low 30s. Short puts or analysis for short-term swing trades, I mean, don't fight the current trend, right? It's a downtrend, right? So even though this is a support range right here and you may want to go long, I mean, look at the higher time frames, right? You have an engulfing move. The bears are just too strong. You can get a short-term relief bounce, but they may just roll over because it's looking like a monthly consolidation. As a result, my favorite way to play this one, short puts, of course. When you don't know if they're going to stop or not, and you want this level instead, well, there's an order type for that, and it's called a short put, right? That's pretty much everything that I want to cover. We covered a lot of these names yesterday as well, so I'm not going to just reiterate what we said yesterday about them. No other changes. We'll cover more of them tomorrow, of course. To the upside, open door, you guys know my ideas on that. It's a lottery play. If you play it very small with money that you're willing to lose. And I was saying that as we backtested support. So maybe you guys have some trades on. Covered calls above the market if you want to get an exit price, right? So just ride them as much as you guys want to. Exit price on a short squeeze or a meme play like this is very tough to determine. So just set levels. Like if you bought in at $2, maybe you want to sell half at $4, 100%, and just let the rest ride. That way the trade is free. Up to you. Reddit continues to be an absolute powerhouse. Very tough to chase up here, guys. Reddit was a play before earnings. Beautiful higher lows being set before earnings. Now it's rallied an absolute ton. You know, an absolute ton, almost up 2x since their earnings. How are we going to chase it up here? Well, the short answer is you can't, right? On to Eli Lilly. Eli Lilly is a fantastic company, just like UNH. They've been selling down for what? A better part of the last, what, year? I mean, it's had some ups, it's had some downs, but it's been a monthly downtrend. Right, and we did come into a very clutch level right here, which was almost a 200-month weekly EMA, excuse me. Very rarely does that ever get tested. So Eli Lilly, people ask me, is it a good buy? And I said, I mean, if pharma is your thing, it's a very high-quality company. It's very high quality, but you have to enjoy pharma, right? Or if not, you're not going to enjoy the ride on Eli Lilly. Ferrari finally coming back, was talking about it back here, was a decent swing trade long or short puts, or maybe long-term position, looking pretty good for the expansion leg right there. Still a decent company for a long-term portfolio, in my opinion. Very good business model. I'm not talking about they have the sexiest cars because, sure, that's a point. But Ferrari's competitive advantage, guys, you need to understand, right? It's all about the demand factor. They always produce, and this is Enzo Ferrari's mindset, which he started the company with. Ferrari will always produce one car less than the market demands from it. As a result, it has a lot of return customers. It's an exclusive customer base, right? So if they're always producing so little demand, they can have a lot of pricing power, which allows them to increase prices, protect margins, and have very decent revenue and EPS expansion curves. It trades rich because it's a very consistent business model, not because they make the best cars. It's the business model that allows them to trade rich. Very strong, high quality company, in my opinion. And the rest of everything, I think we've already covered either yesterday as well. I'm not going to reiterate a lot of the stuff that we covered. So just keep in mind everything that I mentioned in today's video, and you should be doing just fine. Shout out to Booking Holdings, man. We've been adding to Booking Holdings recently. And I mean, it's not the best for a swing trade, of course, because the share price is just so expensive. But adding to this one, adding to Mercado Libre in the long-term portfolio, very decent long-term buys, in my opinion. Not too bad there as well. And even ASML, a company like ASML, right? Even down here, guys, it's still an ad in my humble opinion. So keep all of that in mind when you're looking for either trades, long-term positions, or anything in between. That's everything I had for you guys for today's video. Hopefully you enjoyed. If you did enjoy it, consider dropping a like. I would appreciate it, guys, for the growth of the channel so that this video can get out to more people and maybe we can help out more people in turn. Always consider subscribing to the channel as well. We do these videos every Monday through Friday after the close. And last but not least, if you have any questions, please feel free to leave them down below in the comment section, and I'll be very glad to answer you. As per usual, as I've always been saying, I'll try to shorten down the videos as much as I can, but I know you guys really love this biggest gainers and losers of the day section, so we're not going to cut that. But in the future, when we don't have earnings, maybe, you know, I'll do shorter intros, I'll do shorter news recaps for headlines and stuff like that, focus more on charts. My goal is to really make the videos between like 35 and 45 minutes. I don't know if it's achievable. Before I did this biggest gainers and losers section, it was definitely achievable. But now that we've added it, it adds another 10, 15 minutes to these videos. But you guys seem to like it, so I guess I'll keep it in there. That's everything for me today, guys. I got to run. Take care. Catch you guys tomorrow. Wrap up the week strong. Best of luck, and I wish you guys all the best in all of your trades. So see you guys tomorrow after the close. Take care and peace.